All right, so here is how to enter or exit a futures position, what you need to look out for and what you must do. Now, to begin, you must have money in your futures account. So you have to come here to futures and you click on transfer here. That should bring you to this page where you will allocate whatever money you want to be in your futures trading account. So you are transferring money from spot to USDTM futures. So here you can regulate whatever percentage you want to be in your futures trading account. Now, this is important because if you are trading on cross margin, all of the funds in that futures account will be affected by the trade. So it is very important to allocate whatever amount you want to be taking that risk, essentially. So when you are done with this, you come here to confirm transfer. Then the amount will now be in your futures trading account. You start by selecting the coin or token that you want to long or you want to short. So this is long and short here. So longing simply means you are betting that the price is going to go up. Shorting means you are betting that the price is going to go low. Now you have the coin itself here or token, and know that this is not the actual coin, this is a contract, and I will make a more precise and dedicated video for futures trading, so subscribe for that. This is more like a short episode on how to get in and get out in profit, hopefully. So you have the contract here, or say let's just call it coin, the coin here. Here you can see cross. Now this is cross margin. If you click here, you will see ISO, which is isolated margin. So the margin here is simply collateral for the position you are entering. If it's cross, it means that it affects your entire portfolio. So here you can see I have 45 USDT, so $45. If I enter a position and I'm only using say $10, the collateral for that is this entire figure, not only the $10. So if I just leave it there with no stop loss and nothing, I could potentially lose all of this. But with isolated, the collateral will only be the amount that you are entering the position with. So with isolated, you enter with say $10. That $10 is all that will be affected if you lose or if you win. Now you might be like, the isolated margin is better. No, it's not. And I will talk more about this in my dedicated futures trading video. In short, some trades need isolated margin and some need cross margin. But I'm mostly on cross margin. So if you see a signal that I sent in the group, know that I am using cross margin for that signal. If you use isolated instead of cross on a swing signal like one of my signals, you could potentially get liquidated before the trade goes your way. So the more your collateral on a cross margin call, the better the chances of you actually making through that trade with profits. Anyway, I will talk more about this in my dedicated video for futures trading, so be tuned for that. Now, it's very simple to enter a position here, very simple to win and very simple to lose. Here you will see limit. Now this is limit order. You are placing an order that will get filled later. Now, one of the most important things here is what makes up the fabric of futures trading. Leverage, your ability to borrow money. Now, on some exchanges, you will see this in different positions. On Binance, you will see it somewhere here. But basically, this is what you have to be very careful about. Leverage and the type of margin you are using for any given call. The stop loss and profits, we'll talk about that. But leverage, you have to be very careful with it. Some time ago, like I think that was like 2 weeks ago, I longed Bitcoin at 30x, thinking that I longed at 15x. Well, it turns out I was right about the strategy, so I gained a lot more. But if I was wrong, that would have really, ended very badly. So you have to be extremely careful with the leverage. It's like fuel. It can burn your portfolio to ashes. It can also make you, feel a lot better. But you have to be very careful with this. If you click here, it should show up like so. So here you can regulate what leverage you are using for the given trade. More leverage could mean more profits in a winning trade. Now, the easiest way to think of leverage is that it amplifies your gains and amplifies your losses. So let's say you longed Ethereum and the price went up by say 2%, like normal price went up. So this is the raw percentage gain, 2%. On 10x leverage, that will be 20% gain. On 20x leverage, that will be 40% gain. On 50x leverage, that will be 100% gain. Now, it can also be 100% loss, 40% loss, and 20% loss. So the leverage you are using basically amplifies your losses and can also amplify your wins. Now, let's say instead of 45 here, to make the calculations easier, let's say we had $100 here and we longed Ethereum with say 10% of our portfolio. Now remember, 10% is a lot to long on a single trade. You always have to do between 3% to 5% for maximum profits. Normally you should only use 1% of your portfolio per trade. But many of us do not have that much money, so we dig in deeper into our portfolio per trade. So let's say you have $100 in your trading portfolio, your futures trading portfolio. Now you get a signal that long ETH with 10% of your portfolio. So 10% of $100 will be $10. Let's say that trade is on cross margin. So the entire $100 is affected by this single trade because it's on cross margin. Cross simply means your entire portfolio. You are using your entire portfolio as collateral for that trade. We will talk more about this, what it actually means, in my dedicated video on futures trading. So in this trade, you are using $10. So if you gain 50%, it will be 50% of $10. If you lose 50%, it will be 50% of $10. You are losing 50% of $10, which means you are losing $5. So let's say your leverage for this trade is 10x. It means if Ethereum goes up by 5%, now this will be the raw gain of Ethereum, what you will see in in the normal spot market. It will go up by 5%, so 5 times your leverage, which is 50. So it's 5 here times 10, so it's 50% gain on the initial capital that you used for that trade. So you used $10 for the trade. It went up by 5%, so 5 times your leverage, which is 10, so 50% of $10. So your gain for this trade is $5. On the other hand, if Ethereum went down or went to the downside, in the longing sense, you were hoping that the price goes up. You were betting that the price goes up, but the price went to the downside instead. And it went by 5%. So you take 5% times the leverage, which is 10. So 5 times 10 is 50%. You will then take that 50% and subtract it from your initial capital that you entered the trade with here, which is $10. So you are losing $5 on this trade. The remaining amount in your portfolio will be 95 instead of 100. Hopefully you understand. If you do, leave a like on this video. Now, this works with every other amount that you put in. Let's say your portfolio was actually $100,000. 10% of it will be $10,000. So you begin to see the gains here and the losses too. So the equity, or say the total portfolio now, is $105. Now, going back here, you have the take profit or stop loss. This is very important, but for a swing trader or a position trader, it may not be so much important. I will explain why in another video, but for this one, this is where you put the take profit for this trade and the stop loss for the same trade. So in this example here, where we were talking about Ethereum being at $1,192, let's say you are shorting that it will go to the downside, and you think it will go until, say, $1,000. Yeah. Now, a lot of exchanges will have it a lot more similar to this one, but I changed the picture anyway. But this is to say that when Ethereum reaches $1,000 and you put here take profit price, you put 1,000, that take profit will be triggered. So automatically you will exit your position and your profit will be in your account. And your stop loss here is not just some crazy number. This is where your thesis gets invalidated. So let's say you were trading a bear flag like this one. You want to take profit as the price goes to the downside. So you are shorting. Now, as the price goes down here, let's say you measured your bear flag and this is the target for that bear flag. So you put your take profit here. But you know that the price may as well go up. If you are trading patterns, then you know that one pattern can lead to another and another and another and another. So basically, a good pattern trader is someone who can anticipate a lot more patterns before they happen. So in this case, you think that if the price goes up from here, this would have been a rounding bottom. And you don't just want to wait that it goes up by 5% and you're losing 5%. You know that if the price closes up here, let's say in a 4-hourly or a daily candle, it would have invalidated your thesis of it being a bear flag. So you put your stop loss somewhere here. That is where your thesis gets invalidated. Your thesis of the price going to the downside because of the bear flag will get invalidated if a daily or 4-hourly candle closes up here. I mean, there will be no need to blossom in losses. So you put the stop loss here. That stop loss is what you'll be keying in here. The take profit for the bear flag we talked about is what you will key in here. If the trade goes your way and actually reaches where the bear flag told you that it will reach, then your trade will immediately exit and you will take your profits automatically. You don't have to be there to stop the trade. Hopefully, we are all in understanding up till now. If we are, like button and share this video. It will go a long way to support the channel. Now, down here, we have position, we have open order. Forget about those ones for now. Those are only for this particular exchange. Some exchanges don't have copy trade. So if you took an ETH trade at market price, so the trade has already triggered and you are in the position, you will see it here in position, not here in open order. When you have a limit order, for example, we were talking about Ethereum going to say 1,200 before going to the downside. If you put a short limit order at 1,200, so here will be 1,200 for a short limit order, that will be seen here for all your orders that are open. They are waiting to be triggered. You will see that here, and the positions that you are in already, or say if Ethereum actually goes to 1,200 and gets triggered, your trade gets triggered and you are in the trade, you will see it now in the positions here. So that is very simple. Now you have close all positions here. If you are in my trading group and so let's say I found something in the charts that invalidates all my thesis, and let's say I said close all trades now, or say exit all trades, this will be the button that you have to click. That will immediately exit all of your trades at once. So if you actually took a trade, which I'm just going to take one now for the sake of this video, I want to short at the market price. So I'll just click market price here. If you don't have this in your exchange, you can simply click here. Now you can see that it's market. You can simply click here and you will find market. So you click here to find it. Now we have to set the take profit and stop loss. As I said, take profit is where you think it's going to go, and stop loss is where your thesis gets invalidated. Now, bear in mind that that thesis may be invalidated and yet again get validated. So this is a bit more technical than it sounds. So in this case, we think Ethereum is going to go to $800 and the thesis gets invalidated at $1,350. So this is our stop loss for the trade and this is the take profit for this trade, and those are keyed in. Here we come to short, so you click short here. Now we can see the position open here. Ethereum short at 20x leverage. I put 20x leverage so that you can see the price difference almost immediately. So we can see the P or L here. So this is profit or loss in USDT here. So we will see it here. If we gain say $1, you will see it here. If we lose $1, you will see it here. How much of the 5% of your portfolio you would have lost will be shown here. How much you would have maybe won will be showed here. This is the percentage, so we can see the figure and the percentage of that portfolio you will be losing or gaining. Now the most important thing you should note here is the estimated liquidation price. This is very important. Now liquidation here simply means where your portfolio will get obliterated, where you eventually lose everything. So at this price, you risk losing everything. You will get a margin call asking you to put in more money into your account, or else your portfolio will get obliterated, essentially. So here is where you can close the trade. If in case you are maybe satisfied with the profits or you don't want to incur more loss, you can just close the trade here. If you click here, it will close instantly and you will either exit with all your profits or with the loss. And also you can adjust your take profit. Let's say it goes to 800 and you think, oh, it may continue to go until say 500. You can adjust that take profit target by clicking here. You can also adjust your stop loss by clicking here. So this was a very basic way on how to get in or get out of a futures trade. Essentially how to trade futures. It is a very risky game. You could make a lot of money and you can lose a lot of money. So I am begging you, if you cannot afford to lose it, do not trade it. And yes, if you are in my trading groups, which I will leave the link to below in the description, then you now understand how to take a trade when I signal it. By the way, let's see how that trade is looking now, the Ethereum trade, because I took an actual trade in this video. Yep, it's at 6% gain as of now. So the 5%, and here we can see that's 11 cents because it's 5% of $45. So that's really nothing. Yeah, the gain here is 11 cents and it's 6% gain. So in the case where you enter this trade with say $1,000, this 6% will be something substantial at least. Anyway, thanks so much for watching this video. I hope you did enjoy it and I hope you learned something today. If there is anything you have doubts about, please let me know in the comments. I will reply to it. I will also leave links to my trading groups down below. So if you want to join and be a part of, you can click the button, the link down in the description. Until the next time, stay safe.